You think there's a day of reckoning coming?
Right, but Joe, you got to be careful with just looking at stock price, right? If you look at their guidance, previously they said they were going to do over 500,000 cars. Last night, if you look at the midpoint, it was 495. So they actually cut their guidance last night. And with respect to stock price, look, you saw Nikola, right? They had a truck rolling down a hill that didn't have a
pre-market. That despite Tuesday's big promises about a super-fast Model S and dramatic battery and manufacturing improvements over the coming years. Tasha Keeney is analyst with global asset manager ARK Invest and joins us now. Tasha, I mean, really, I think investors are already charged up this year with the stocks up almost 400%, so we'll skip that part. What was most revealing about what you heard yesterday from Elon Musk and crew?
Well, I think that the key takeaway here is, you mentioned the $25,000 car. Tesla is reducing battery costs by 50%, increasing range by over 50%, and reducing investment, so the cost to build factories by 70%. I mean, if you're a traditional automaker, you must be so scared right now. I mean, you're trying to save your core business in the pandemic. And on top of that, you're trying to build an electric autonomous vehicle. And really, none of them have successfully done that, especially on the EV front. Also, if you are building an electric vehicle, a lot of automakers are actually using a different form factor of battery than Tesla. So they couldn't even try to copy Tesla if they wanted to. They'd actually just have to start with a whole new battery platform. But on top of that, I think it's just going to take, at this point with Tesla's patents that they have on this new cell structure and architecture, I think that it could be sort of a lifetime advantage that they have over the auto industry. I mean, I think it'll be massively difficult to catch them.
Engine. How is that different from what Tesla did years ago when they showed solar panels that didn't work on a house that was on the set of Desperate Housewives to sell the $2 billion acquisition of Solar City? Listen, Tesla's revenues, as you know, peaked essentially in the fourth quarter of 18. Their margins peaked in the third quarter of 18. And while people compare Tesla to Amazon, it's not Amazon. Tesla's more like AOL or BlackBerry. There's 46 new EVs hitting the market next year, 8 of which are coming from VW. And if you look at what VW said with respect to 300 gigawatt hours per year of battery capacity, that works out to about 4 million EVs they're planning to push out over the next 2 to 3 years. So I think that what Musk did last night essentially was push out the production of his batteries. And I think the issue is all the big boys, Ford, GM, VW, they've essentially brought out battery capacity. There is no capacity left. So Tesla effectively has to do it on its own. But if you look at their R&D as a percent of revenue, it's dropped from roughly 16% in 2016 to 4% today. So they're not even investing. So when you look at his missed promises and you look at the fact they're not investing, I think you have to be very skeptical with respect to his projections. And I think next year they go back into losses as that credit revenue falls.
I mean, these numbers are huge. 50% reduction in cost per kilowatt hour, 50% increase in range, as you said, and nearly 70% reduction in investment per gigawatt hour. I want to pick you up on what you just said there, because in the past we've discussed this. You've said, look, Tesla's battery technology is, 4 years ahead of the competitors? Are you now saying if, and putting a big emphasis on if, they can achieve this, then that lead would be insurmountable?
I think that's exactly what this means. And the cheaper car, is also another point in that bucket, right? Because now if you want to match Tesla on price and performance, how are you going to do that? Their cars are getting even cheaper. They're breaking into other customer segments. So really, I think their market share should be a lot greater coming out of this announcement. Their future market share should be greater coming out of this announcement too, because of that cheaper model. And I mean, traditional autos are really just wasting their time on things like fuel cells, which we know is a much less efficient technology, doesn't make sense from an infrastructure perspective. So they really haven't even gotten their ducks in a row yet on batteries, and now Tesla's just running away from them.
So in terms of the forecast for batteries, you don't believe what Elon says he's going to be able to do in terms of what the battery will be capable of, or the number that they're going to be able to either buy from existing suppliers, or they want to do it on their own. They got some pretty aggressive plans, but it has been pushed out a little bit. You think those are all, you don't think those are realistic projections that Mr. Musk is making? You don't expect those to come true either?
Well, listen, it's not about what I expect. There's math you can do, right? They said 65 gigawatt hours per year. That's what they're looking to get to. That will require roughly an $8 billion investment on top of the Cybertruck, on top of the Gigafactory in Texas, on top of the factory in Germany. So they need to raise billions of more dollars to get to these goals, and they need to invest significantly in R&D, which they're not doing. Listen, the problem for Tesla is there's massive competition coming next year. You know, this reminds me of the movie Ford versus Ferrari. You remember Ford got really upset with Ferrari at the Le Mans race because they said, we're the best auto manufacturer in the world. Every auto company in the world is coming for Tesla's neck. 46 new EVs coming in 2021. Over 100 coming.
It's quite fascinating, isn't it, if we're talking about a $25,000 entry point, and actually they were saying a fully autonomous Tesla, but we'll skip that bit because I know you get very excited about their advances in autonomous technology and their data collection too, because you know, if you look on the lifetime basis of an electric vehicle, it works out cheaper, but it's the entry point, the relative height or the greater cost that's difficulty for many people here. If you can bring those kind of costs down, then you know there's a double whammy here too. But this is all about the future, and I think that's what investors are focusing on today. It looks great, but can they achieve it, Tasha? Why should we believe that they can?
Well, I think Tesla sort of already achieved the impossible, and we know that they're the leader in batteries. And if you think of where are battery breakthroughs happening, if they're happening in the lab and these research centers that are outside the company, where's the first place you want to market your new invention? It's going to be Tesla. So I think that on top of their own internal work, they're likely seeing the most cutting edge research coming at them from every other place in the world. I mean, Elon Musk has said, if you can build a better battery, show it to us. So I think that it's sort of an easy case to make that if anyone can do this, it's Tesla.
The move in the stock gives them, I mean, in terms of raising capital, they're in a much better position to do this than their competitors, given what the stock has done.
Right, but you also have to consider, right, they need to start showing growth. They're valued at a multiple of VW, despite the fact they're targeting 495,000 cars sold this year. VW sold 11 million cars. So they have to show significant growth. And we think that, given what he said last night, we think their deliveries are actually going to be down in 2021 because they just don't have the battery capacity to hit what they need to hit, and everybody else is sucking up all the capacity in the industry. So I think when people see that, I think people are going to be far less willing to give Tesla infinite amounts of money.
Tell me why you're excited about the autonomous opportunities again here, because I know it comes down to the data that they're already collecting and again an advantage that you think they have.
Yes, well, one incremental update that we heard last night. Well, first of all, it's notable that this is Battery Day, and Elon Musk mentioned autonomous technology a number of times. I mean, this is clearly so important to them, and they know that. And it makes sense to us because we see this as the next largest opportunity in the auto industry. It's going to completely change the way you look at an auto company if they pull off autonomous technology. They're basically going to have software as a service like margins. But last night we heard, so Tesla has been working on this update to autopilot for some time that basically combines two of the steps that you need in the process to make an autonomous car successfully drive. In doing so, they get an order of magnitude improvement in the efficiency and sort of the processing that you can do in autopilot. So that seems to say that, you know, this autonomous lead that they have over other automakers is again going to be accelerated by this new thing that they're building, which is this rewrite of their neural net. So Musk said that would come out in full production in the next month. So that's another really exciting development that I think is likely going to be overlooked.
I wonder, you'll disappoint me if I ask you about that Tesla Plaid 0 to 60 in less than 2 seconds. If you tell me that's not going to work, then you've popped my bubble all around. Andrew, you got a question for Gordon?
Gordon, I just want to put a fine point on something, Gordon. You're suggesting that next year for Tesla, that they're going to have supply problems? That's the problem? Meaning there's going to be so much demand for this car and their problem is going to be supply?
No. I think the problem is demand and competition. I think Tesla's deliveries.
Well, no, but hold on. You just said, just hear me out for a second, Gordon. Sure. You just said a moment ago, you said everybody else is sucking up the battery supply. They won't be able to have enough batteries. And so if they don't have enough batteries, that's a supply problem. That's not a demand problem.
Right. No. What I meant by that is they're not going to be able to expand their capacity. Listen, the reality is they are roughly 70% utilized if you look at their 2Q shipments versus what they said their capacity is. So they're not even selling out their current capacity, despite the fact that they're ramping a 500,000 car per year facility in Germany and a multi-100,000 car facility in the U.S. There's not enough demand for their existing capacity. So the issue is not supply. They're not demand constrained or supply constrained. It's a demand problem, and it's competition next year that's really going to hurt them. The ID3, VW's ID3, which just launched in Netherlands, Norway, Spain last month, as of yesterday, has outsold the Model 3 in its first month. That's a big problem for Tesla. ID4 coming in the fourth quarter.
Tasha, I'm going to get shouted out for asking this because we have about 5 seconds, but I know it's a long-term price target. Post-stock split, what number should we be focusing on for Mark Invest?
So we're working on updated research. Look out for that. But our published price target right now, if you account for the stock split, would be about $1,400 per share.
$1,400.
Yes, and so that's really taking into account the electric and the autonomous opportunity. You have to value this company like a technology company that it is.
Yeah, I know. This is not a car maker in your view. Okay, Tasha Keeney, just a car maker. Tasha Keeney, analyst with ARK Invest. Great to have you with us as always.